Corporate earnings, and this is from Max Life. Max Life reported numbers where APE growth was ahead of estimates. Margin contraction was also arrested to quite an extent. Yash actually caught up with Prashant Tripathi, MD and CEO of Max Life Insurance, on the company's Q4 performance and the outlook ahead for the year. Take a look, and thank you very much for watching.
Our savings part, especially non-par savings, saw not as strong a growth as we saw the previous year. But at the same time, we planned for it, and in terms of volume, we did cover it through our par segment as well as through ULIP segment. So that was the big volume driver. But at the same time, we focused a lot on the other segments. For example, we focus on protection and health, which grew for us for the entire year, 63%, very strong growth in Q4 also. We grew our annuity segment by 59% for the year. We grew our group credit life segment by 59% for the year.
In FY25, what could be the range of APE growth if all these things are firing up?
Max Life Insurance targets to gain market share and grow faster than the market. So, in that context, I think my expectation is that the market, if I were to look at last few years, average has been growing in early teens between 11 to 13%. And in that context, Max Life Insurance will try to gain share. So, the plan that we're rolling forward is a high teen kind of a number, high teen growth, similar to how we grew this year. It will be a balancing act, and we're hoping that the VNB growth will be either in line or marginally lower than how the sales will grow.
How big was a reason of repricing a lot of your products? Did that come to help you to sort of arrest the margin compression? Also, when it comes to ULIP, I understand that you've been able to derive a higher margin from what traditionally you've been doing on the ULIP side as well. Tell me, what was the margin out of the ULIP portfolio in FY23 versus FY24?
It is something that we don't disclose to the market, so I won't be able to share with you exactly the margin for ULIP portfolio. But I think when you look at the overall bouquet of products that we sell, the objective always is to remain balanced. And that indeed helped. So you wouldn't have seen us drive, say, 70% ULIP or 60% ULIP. Our ULIP generally remains range bound, anywhere between 35 to 45.
If the ULIP share increases in FY25 as well, what is the range that you would want to guide us on as far as VNB margins for FY25 are concerned?
So giving guidance, yes, as you can understand, is always a crystal ball gazing. So I'm not really.
You've been doing a good job at that, by the way, but in that sense.
But yes, I think you could derive. I mean, like I mentioned to you, our VNB number, we are expecting that it will be either aligned to the AP growth number or marginally lower. So as you can understand, in essence, what I'm telling you is we will try to be as close as possible to the numbers that we have always been guiding, closer to 25, 26. Those are numbers that we're going to work towards.
In FY25 going forward, do we still get to see growth in your protection book, in your annuity book, upwards of 50%? Second question, by what year do you expect growth to get normalized in these kinds of businesses? And what could be that normalized growth?
So yes, as you would understand, it's not just about our base. It is also about demand in the market. These two categories are completely underpenetrated. We're not planning for 50, 60% growth, but the attempt will be to continue to drive these two segments. We are actually working on a strategy to be amongst top three players, both in protection as well as annuity segments.
Axis Bank now, which holds about 19%, there's 1% stake which is still pending for them to be acquired, which happens at a later stage. I have two questions here. The first one, why not let them acquire this 1% stake exactly how they've acquired this 19% stake, which is through a primary transaction? Why do a secondary transaction through the promoter? Second question, by when do you expect this 1% stake to be acquired? Could that happen in the first quarter of FY25 itself?
We will work towards it. The objective is to do it. And the reason why we didn't do the entire 20 and we did 19.02 is because of the approval. So the reason is more logistical or administrative than it's not our desire to not do it. So we will work with the bank. The bank is very desirous to take the stake to 20%.
Okay, but certainly in the first half of FY25.
That will be our endeavor.
Okay. As far as that 1% stake and this transaction settling is concerned, after that, you expressed your intention to sort of restructure the organization. What I want to understand here is that once you start, let's say after the first half, in the second half, if you initiate the process of restructuring, by when does one expect, with all the approvals that would be required, for that restructuring process to be in place and the entity to be settled?
So it is our desire actually to work on it, but it is premature for me to tell exactly. Typically, these transactions take anywhere between 18 to 24 months to consummate. So the desire will be, if we were to begin in the second half, is to take about 18 months and do that. But at the end of the day, the ultimate objective for Max Life Insurance is to be a directly listed organization, because what we have got right now is a bit suboptimal.
Correct. So in that case, of course, the structure will have to be a merger with Max Financial Services, which gets Max Life automatically listed on exchanges. Is that understanding correct?
The other way around, actually.
Okay. Prashant, but the problem here is, and you faced this problem in earlier avatars of transaction as well, which is the Insurance Act, which does not allow a merger between an NBFC and an insurance company. It only allows a merger between an insurance company to an insurance company. How does that sort of come into the way of the transaction that you're anticipating?
I think that when we initiate, we will be in discussion. And my hope and belief is, and it's been repeated multiple times by a respected chairman of IRDAI, that he or the IRDAI wants as many companies, life insurance companies, to be listed. Max Life Insurance is a very large player in this space and will like to be listed. I'm sure when we come to that stage, we will initiate a discussion, and we are very hopeful that we'll be able to, traverse the journey. And of course, there's, when you're working on such things, there's always a plan A and plan B. So, we have a game plan. Just to clarify, our understanding is that, between an NBFC and a life company, that kind of merger is more in the context of when two life insurance companies are trying to merge. So, that entire section gets triggered when two life insurance companies are merging. In this case, it is a very, very straight, transaction, because Max Financial Services has no business. We are the only business. So I'm sure, the regulatory, stance or regulatory review will be a journey that we will pursue.